everybody. Welcome back to the Attract Capital webinar series. Janine here with CEO David Barnett.
Hello.
Today we're going to be talking about special use cases for mezzanine debt. So Dave, can you explain why these are special cases?
Well, they're special cases, use cases, Gene, because they give the user or the person that's raising the mezzanine debt big value. They essentially allow you to transform your business without having to invest large sums of equity into your deal, and you really get the impact of having a large equity investment at a much lower cost. So that's why we call them special use cases.
Okay, and what is the first use of the special case?
If a business is acquiring another business, Janine, and they have equity value already contained in the balance sheet, or there's a way to calculate the value of the business, then you can pretty much get 100% of all the financing you need from a mezzanine lender. So you don't have to bring in private equity in order to get your deal done. So that's a very special use case because it's a completely non-dilutive way of raising capital. So you can double or triple the size of your company just through paying a mezzanine debt lender his interest rate and his other return that he needs. So to us, that's a very special use case.
Yeah, that's really interesting. And then what is the second use?
The second one is when you have an independent buyer and they're buying a company and they have a good amount of equity to put into the deal, but it may not be the traditional 35-40% equity that a private equity investor would put in. If you know how to structure the deal and if you can keep the purchase price at a certain multiple of the adjusted EBITDA, then you can use mezzanine debt to fund the entire deal. It'll fund the entirety of the capital stack without you having to bring in private equity or other institutional equity. So again, it functions as the one-stop shop for the independent buyout deal.
That's great. So we have one use, second use, and what's the third special use case?
The third special use
three.
case for mezzanine debt is an acquisition roll-up, where if you're looking to consolidate a fragmented industry and you have many acquisitions that you want to make over a short period of time, if you're able to bring in some equity of your own and you can buy the companies at the right price, you can set up an acquisition facility provided by a mezzanine debt lender, and they can give you all the capital that you need to be able to roll up and build a very large entity through acquisitions. So these cases build enormous value. Mm-hmm. They don't dilute you in terms of your equity if you know how to structure them the right way, and that's why we call them special use cases.
All right, well that's very special. I like that. Thank you for tuning in, everyone, and we'll see you soon.
Take care.